Welcome to today's presentation. My name is Peter Iosif, Senior Market Analyst at IronFX. In front of your screens, you have your USDs for our chart. Mind you that we will be going through major FX pairs, and if we have time, why not have a look at gold, maybe your stock market indexes or oil. In any case, feel free to actually provide any trading instrument you would like to have a look at, and if we have time we'll go through it. If not, we can do it always tomorrow. In any case, we will be mixing technicals with fundamentals, and for the time being we're highlighting the drop of Euro USD. It's characteristic how the pair during today's European session has been breaking the S1 1.0820. Definitely that has to be turned into a resistance line, given that the price action has moved decisively lower. And let's go hunting for a new ultimate support line. Unlocking the chart. Let's go back. We have resistance exactly here. On the other hand, though, could go lower. In my opinion, somewhere here. And that would be the 1.0615. Maybe 10. Yep, that's better. Okay, let's readjust the chart. Let's correct also the labels. Okay, the R3 now is being placed on 1.0982. The R2 at 1.0890. The R1 at 1.0820. The S1 at 1.0765. The S2 at 1.0700. And finally the S3, newly set, at 1.0610. That's 90 pips lower. Now let's talk direction. I would be highlighting here that the upward trend line of the pair has been broken. That's the first element which we have to take notice of. And please mind you that the breaking of the upward trend line exactly highlights the interruption of the upward movement. Now, after that, it could go in a sideways manner, but the pair's price action actually failed to respect the 1.0820 level, breaking it to the downside and turning it into a resistance line. I would expect the pair to continue lower despite some correction right now. And I'm noting this on two factors. First factor is the fact that the price action corrected after hitting on the lower Bollinger Band, which more or less may have implied that the pair has reached oversold levels. On the other hand, though, note how the RSI indicator dropped below 50, aimed for 30, did not quite reach it, corrected a bit higher, but remains, in my opinion, in bearish territory. So that may drive the pair even lower, with the next stop being set at 1.0765, a level which provides support once, twice, but also here in the back. So that seems to be pretty valid. I would be highlighting, though, as the next possible target the 1.07. It's a very characteristic support line. It was able to reverse a downward motion and breaking the downward trend line which was guiding the pair. Now it's moving to the upside. Allow me to breach. There you are. That's clear. On the other hand, should the pair stabilize, I would expect it to remain within the boundary set between the R1 1.0820 and the S1 1.0765. Mind you that we had also the release of the economic sentiment of the Eurozone, as well as the industrial sentiment and business confidence. Let's have a look. Okay, you can see that since the release, there was an upward movement of Euro USD, highlighting a strengthening of the Euro pair, of the Euro side of the pair, more or less implying that the release may have been better than expected. It wasn't much, but it was interesting the fact that it rose, and we're talking about almost 10 pips here, 16 pips. Okay, let's have a look at how that was. Invest. Now we had Eurozone's final consumer confidence. Okay, that verified more or less the less pessimism which was measured in February. The business climate more or less remained the same. Okay, overall they were good. Industrial sentiment was not as good as expected. On the contrary, it dropped a bit. Overall, though, the euro seems to have gotten some support, though. So that's on a positive side for the euro side of the pair. Back to the forward chart. Once again, we tend to maintain a bearish outlook, and most probably we may see the pair aiming for the 1.0765 initially. On the flip side, should the bulls take over, I would require the pair to rise, breach definitely the 1.0820, and reach as high as the 1.0890. I would be requiring a higher peak than this one. Let's have a look at USD/JPY, which remained rather sideways in the past few days, and actually still is. Note how the pair has a very tight range-bound movement right now. And it's testing once, 2, 3 times the 150.80. Mind you, we are still in the 4-hour chart, and all charts to be presented are to be of the same time frame as otherwise stated. It's interesting in the sense that the pair seems to have hit the ceiling at the R1, but it's constantly trying to break it. It's as if failed once, try again. Indicators list. We definitely don't need the volume part. Could lower. Let's readjust the labels as well. We tend to maintain a bias for the sideways motion of the pair to be maintained, possibly between the S1 149.85 and the R1 150.80, with the R2 being the next possible target for the bulls at 153.70. Yet at this point, allow me to drill into the to the monthly chart. Unlocking it. We are at very high levels, and I would be highlighting here that the pair seems to be at 30-year, 33-year record high levels. Actually, the 153.70 would be that level. The R2 is, in my opinion, a record high level for USD/JPY. Any movement which was actually higher than that was 1990, which for the time being is irrelevant. So the bulls may be having some cold feet here. Nevertheless, should the bulls maintain control, or get control to be exact, I would expect a clear break of the R150.80 and the price action to reach, even test, if not breach, the 153.70 resistance level. On the flip side, should the bulls give up and the bears take over, we may see the price action dropping, breaking the S149.85, aiming if not breaching the 148.88, with the next possible target being set quite lower, and that would be the 146.80. Once again, our base scenario for the pair is currently the continuation of the sideways movement, which has been in place since around the 13th of February, within the boundaries set by the R150.80 and the S149.85. Let's have a look at GBP USD. Similarly to the euro, the pair dropped, breaching the support line below it, and that would be the 101.2645 support line, now turned to resistance. Let's go looking for a new S3 though. Unlocking the chart, going back. I'm having a throw here, which I'm actually noting. The next one is pretty far wide lower, yet one could also use this peak. Yeah, that's a clear resistance line. You see how this level actually was able to reverse the upward motion of the pair, which lasted for about a week or so. I'm keeping this as a support line, given that the price action now is above it. Readjust the chart. Let's correct the levels as well, so we get a clearer picture. Similarly to the euro, the bearish outlook seems to be there, albeit in the case of cable, it's less clear-cut. And I'm highlighting the bearish outlook. Why? Because you can see how the price action has broken the lower boundary of the upward channel, which was guiding GBP USD. Now let's set the R3 at 1.2870, the R2 at 1.2760, the R1 at 1.2645. Once again, the whole movement, it's indicative how identical it is between cable and Euro USD, and practically was caused by a strengthening of the US dollar. And at this point, we have to note that markets are focusing on today's release of the revised US GDP rate for Q4, otherwise mentioned also as GDP estimate. That's for Q4 2023. Now the rate in the preliminary release slowed down considerably. It slowed down to 3.3% year on year. But I would be noting that the narrative of the Fed for the possibility of a soft landing of the US economy is actually still present. And the possible acceleration of the US GDP rate for Q4 last year could more or less actually provide some support for the USD. Why? I'm highlighting this practically on two reasons. The first reason is definitely the fact that the US economy grew at a faster pace than initially estimated in the preliminary release for the last quarter of last year. But exactly such an acceleration would allow the Fed to maintain rates at high levels for longer without pressure. And I think that's the main issue here. What's the Fed going to be doing? And at this point, let me also note that we have a number of Fed policymakers speaking today. I would be highlighting practically New York Fed President Williams. Now, we may see the New York Fed President wanting to push back against any market expectations for quick and extensive rate cuts. And should that be the case, we may see him stressing once again that he expects rates to remain high for a longer period, which could provide some support for the USD. That would be in the late American session today. If he actually, on the other hand, we have also to note the possibility that the US GDP rate for quarter four slows down. And in such a case, we may see the USD weakening, while at the same time, a possible slowdown of the US GDP rate for quarter four could, in my opinion, provide some support for gold's price, given that market worries for a possible recession, I wouldn't say would be dominant, but they could be enhanced. And that could drive practically investors towards gold. Or at least it could weaken the US dollar, which in turn, given the negative correlation with gold, could support gold prices once again. Returning back to cable. Now, for the time being, the direction, in our opinion, seems to be downward, despite the correction higher, which was expected given that the price action, like in Euro USD, was able to breach the lower Bollinger Band and was forced back upwards. But the widening of the Bollinger Bands may allow the price action of cable to renew its bearish tendencies, probably aiming, if not testing, the 1.2580. And should the S1 be broken, the next possible target for the bears, we are setting it pretty much lower, 135 pips lower at 1.2445. On the flip side, should the bulls take over, we may see the price action of the pair rising, breaching the 1.2645 resistance line, and start aiming, if not testing, the 1.2760. Let's have a look at USD CAD. In reverse to Euro USD and cable, we can see how the pair jumped in today's European session given the strengthening of the US dollar, breaking the R1 1.3570. So this has to be turned into support line now. Let's go hunting for a new ultimate resistance line. I'm going to be switching. Oh, here it is. It's a nice peak. You can see how this peak practically was formed after consecutive higher peaks and higher truths, reaching an apex. This level was able to reverse it and begin a downward motion. It's very subtle, but it's there. So we're turning this into resistance line, and that would be in red, the 1.3975. Let's readjust the chart. Let's correct the labels. starting with the S3, which is now being placed at 1.3320, the S2 at 1.3450, the S1 at 1.3570, the R1 at 1.3675, the R2 at 1.3830, and the R3 at 1.3975. Now, CAD traders today are expected to keep a close eye on the release of Canada's current account balance. And should the figure drop deep into the negatives, we may see USD CAD being enabled to rise even higher. I would be noting here that also oil prices may play a role, or enhance, if you prefer, a possible weakening of the Canadian dollar. And I'm highlighting this given that Canada has a status as a major oil producing economy. And there is a positive correlation between, or there is a perception of a positive correlation between the Canadian dollar and oil prices. Whenever oil prices rise, we see also Canadian dollar getting some support. Vice versa, should oil prices start to fall, we may see the CAD weakening as well. Mind you that the leader, the factor which is generating the movement, is oil and not the Canadian dollar. At this point, it would be interesting to have a look at oil prices, but before we actually switch to WTI's chart, let's discuss USD CAD. Okay, we have seen the pair breaching the 1.3570 resistance line, a level which provided resistance back here, but it's not so decisive. But the RSI indicator is at very high levels. It has actually hit a ceiling at the reading of 70. It has corrected slightly, very slightly below it. And in my opinion, that's indicative that there is still a bullish sentiment left in the market for the pair. Mind you that the price action has breached the upper Bollinger Band, which has forced actually the pair to correct a bit lower. In my opinion, I would expect that despite some hesitation around the 1.3570, the bullish sentiment is going to be maintained. And in such a case, we may see the pair start aiming for the 1.3675. On the flip side, should the bears take over, I would expect the price action to drop, break the 1.3570, and reach, if not breach, the 1.3450. Let's have a look at oil, as we have mentioned it. Note how oil prices remain in a tight sideways movement between the 78.35 and the 75.65. Now, in today's European session, allow me to drill to the 5-minute chart. There was a downward motion, however, there was also some stabilization. We'll wait and see. Back to the forward chart. So we would expect the sideways motion to be maintained. Maybe some bearish tendencies could emerge for WTI. And I'm saying this practically on two reasons. The first reason, it's a fundamental one, would be the strengthening of the US dollar. Should that be maintained, we may see it weighing on oil prices. And I would be also noting the release of EIA crude oil inventories figure. It's a weekly figure. It's expected to show another increase of US oil inventories, which more or less would be implying that the production side was able to surpass demand levels. And that creates a narrow but still present slack in the US oil market, which may more or less drive oil prices a bit lower. Nevertheless, on a technical level, for the time being, we maintain our bias for the sideways motion between the R1 and the S1 to be maintained. And I would be noting to that end the fact that the RSI indicator has dropped and is currently just above the reading of 50, implying that the bullish sentiment or any bullishness in the market sentiment for oil seems to have faded away for now. And the market is looking for a new direction. Okay, let's have a look at AUD/USD. Okay, AUD/USD has escaped the sideways motion it was in between the R1 0.66 and the S1 0.6520, and it has breached the low boundary to the downside, obviously. Now we have to turn this into a resistance line, and let's go search for a new ultimate support line. Going way back. There we are. We have a nice support at 0.6170. And I'm keeping it. Let's readjust the chart. Let's correct also the labels. Starting with the R3 at 0.6655, the R2 at 0.66, pretty narrow actually, and the distance between the R2 and the R1 is even more narrow, as the R1 is being set at 0.6520. The S1 now being set at 0.64. The S2 at 0.6270. And the S3 at 0.6170. Now at this point, my best guess is that actually the support lines are too wide apart. I'm going to be narrowing the distance and actually raising the S1 to meet this true here. That's my turning point. Should the price action breach that level, that would be a confirmation of the bearish movement. And it's set at 0.6440. Let's have a second look at the support lines of S2 and S3. Okay, I'm narrowing it. One support here, another support here. And that would be the 6350. Readjust. Support line being set S1 at 0.6440, the S2 at 0.6350, and the S3 at 0.6270. Locking everything in. I have a sense that we are in for bigger movements from AUD/USD, and I would be highlighting the release of China's NBS and Kaixing manufacturing PMI figures, which may more or less provide a glimpse into how Chinese factories are actually struggling to keep economic activity afloat. Now, should there be any deterioration, we may see that weighing on the Aussie as well, given that it would imply less exports of raw materials from Australia to China. For the time being, though, on a fundamental basis, okay, we definitely have covered the USD ones. I would be noting the market sentiment for the Aussie. The Aussie is a commodity currency. It's well known to be particularly sensitive to the market sentiment. And I would note that as a riskier asset, should the market sentiment turn more risk averse, we may see that weighing on AUD/USD. While on the flip side, should there be more optimism, we may see the AUD getting some support, getting some inflows. For the time being, AUD/USD maintains a downward motion opinion. It's characteristic how the RSI indicator has reached the reading of 13 and bounced slightly off it, while the price action has breached the lower Bollinger Band. I would expect a correction higher, but overall I would also expect, should there be no surprises, that the downward motion is going to be maintained. And we may see the price action starting to aim once again for the S1 0.6440. Should that be breached, it would be a confirmation of the downward motion, and I would expect an intensification of the downward of the bearish outlook. That's about it. So, from all of us here at IronFX, I hope that you found this report useful, or this presentation. Once again, please do suggest any trading instruments you would like to have a look at, and we could cover it in one of our presentations. From all of us here at IronFX, once again, best wishes for solid trading.
Everyone, my name is Emily and welcome to another educational video. As part of our technical analysis series, we would like to look at the technical indicator called moving average. A moving average displays the average of data points across a predetermined number of time periods, typically price data. Because each data point is computed using information from X number of prior time periods, it is referred to as a moving average. Moving averages smooth the price data to create a trend tracking indicator by averaging previous data. Although they lag since they are dependent on historical values, they determine the current direction of the price rather than predicting it. Moving averages help smooth out fluctuations in market prices, filtering out the noise and making it easier to establish underlying trends. They also serve to alert traders to important changes in direction. Moving averages can be used to indicate potential support and resistance level, as well as the trend's direction. Additionally, they serve as the foundation for additional technical overlays and indicators, including Bollinger Bands, MACD, and the McClellan Oscillator. The most popular is the simple moving average. By calculating the average price of a security over a predetermined number of periods, a simple moving average is created. For a 5-day moving average, you simply add the closing prices of the last 5 closings and divide the sum by 5. You add each new closing and skip the oldest. A moving average is an average that moves as its name suggests. The average moves along the time scale as new data is added and old data is deleted. The method is the same whether you choose a 10-day average or a 40-week average. Rather than adding 5 days, you add 10 days or 40 weeks and divide the amount by 10 or 40 as appropriate. Thank you so much for watching us today, guys. See you soon.
Let's get started. So sorry about that. I, for some reason, could not turn on my camera. Okay, but let's just get into it. So, as per usual, a risk warning and disclaimer first. Our products are traded on margin and carry a high level of risk, and it's possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. So do your own due diligence before investing any of your money. Hey, I'm Melanie, and I will be your speaker for today. I'm an investment analyst from Everest Virtual Group, who are finalists for Best FX and Equity Research in 2019 to 2021. So here's our agenda for today. We're going to understand what makes a valid trend line and trend channel, what exactly are breakouts and fakeouts, and we're going to look at some indicators to determine momentum and look at improving the probability of successful breakouts. Okay, so let's start off with trend lines. So here's what makes a valid ascending trend line. Firstly, they should be drawn from the bottom if it's an ascending line and not the top. Next, trend lines should have at least 3 significant touches, and 2 touches tend to be more coincidental, which is why we typically would recommend 3. So here are a couple of examples. Okay, you can see how significant exactly these troughs should be, or the swing lows should be, in order for them to be considered valid points on a trend line. Okay, here's another example, and here is an example of a descending trend line. So similarly to ascending, they should also have at least 3 significant touches, but for descending, they should be drawn from the top and not the bottom. Okay, here's another example. In this case, we have really nice 4 swing highs that touch our trend line. Okay, but 3 is enough. Here's another example. Okay, so here we've drawn out exactly how significant these touches need to be for it to be considered valid. And then we want to watch out for at least 3 significant touches, because then there could be a possibility that price would likely react off of that trend line again, which you can see is what happened here. Okay, so price actually reversed back to the trend line and is playing the reaction off of the 4th touch. Okay, now pretty straightforward. So let me know in the chat whether you guys think that this is a valid trend line or not. It's not. Yeah. Victor, yeah, trend here is down. Yeah, so it should be drawn on top. Yes. Okay, yeah, pretty straightforward. I think you guys have gotten it, so let's just move on. So now we're gonna look at drawing trend channels. So for trend channels, they require at least 4 significant touches. So 2 at the top, 2 at the bottom. And they don't need to be in consecutive order, like in this image here. Okay, so for example, over here, this is also consecutive, as in top, bottom, but it can also be top, top, bottom, or bottom, bottom, top, top. Yeah, so the order doesn't really matter as long as it's significant, swing highs and swing lows, and they touch your channel 4 times. Okay, this is an example of an ascending trend channel. Okay, now let's take a look at liquidity traps. Okay, so what exactly is a liquidity trap? So it's basically a situation in which monetary policy becomes ineffective in stimulating the economy, even when interest rates are near or at zero. So this occurs because people and businesses are hesitant to spend their money, even at low borrowing costs, leading to a lack of demand for goods and services. So in the context of trading, a liquidity trap can cause problems for market participants as it may lead to a decrease in market liquidity. So that basically means that it'll be more difficult for traders to enter or exit positions quickly and at their desired prices. So this can result in wider bid-ask spreads, increased volatility, and decreased market efficiency. So central banks actually try to address liquidity traps by using unconventional monetary policies. Okay, so some of these include quantitative easing. So they inject more money into the economy so that they can encourage spending. However, the impact of these policies on financial markets can be difficult to predict and may lead to unintended consequences. So here's an example of a liquidity trap. Okay, so firstly, we see price reversing at the swing high. Once price surpasses the swing high resistance, right, it clears the orders and then it drops below the resistance again. Okay, so another example here, price breaks out of the ascending trend line as well as the ascending trend channel. So it shoots out of it, clears the orders, and then at the point 1.04791, this swing high price reversed and it proceeded to drop back down. Okay? Okay, now let's combine trend lines, trend channels, support lines, pullbacks, and overlaps. Okay, here is just a checklist. Okay, so you can screenshot it if you want. I'm just gonna get rid of my face. which when I was starting out with technical analysis, this checklist was really helpful for me. Yeah, but it's just a list of things to look out for. You can find this checklist and other tutorials on the forexarmy.com website as well. But basically, for this checklist, it just tells you that if you combine multiple technical analysis methods, um, your analysis would then be more accurate. Yep, I'll just type into the chat. Just forexarmy.com. Okay, maybe I'll show you guys what the website looks like as well. Okay. This Forex Factory, sorry. Forex Army. This one. Okay, so actually it's theforexarmy.com. Okay. So here you'll find some trading guides. So we have guides on Fibonacci, support and resistance. We also have trading tools that you can download for free and just implement into your MT4. Okay. Yeah. So we have Fibonacci, how to draw it correctly, support and resistance, and a couple of MT4 downloadable trading tools as well. Okay. Let's see. So yeah, this really in-depth and really easy to understand Fibonacci guides, as well as some risk management techniques. So this is really important. Support and resistance. So all of these as well. Yeah, okay. You can go and explore this website on your own. Okay, so here's another checklist. So this is specific to playing the continuation. So you can play the bounce or reversal by firstly checking whether price respects the Ichimoku. Secondly, trend line, key horizontal support or resistance levels, any key Fibonacci levels that it is near. And these are the 4 Fibonacci techniques that we use. And where's the next key level that it might go? So you fine-tune these levels by looking for confluence areas. So confluence areas tend to be a mixture of Fibonacci levels as well as horizontal levels. So like your overlaps, pullback levels, as well as pivot point levels if you do use that indicator. So when you find a couple of levels that match up at the same area, it doesn't have to be a level, it can be an area. As long as it's close together, that's fine. Yeah, then that is more confirmation that your analysis is correct and that price is likely to be attracted to that level. Okay, so in this example, I have an ascending trend channel. Okay, and price is moving within the trend channel. So in this case, I'm playing the continuation, and the continuation in this case is simply an uptrend. Okay, and when I say bounce or reversal, I'm looking at price bouncing off of the trend channel, which you see over here. bounce off it, it moves within the trend channel. So that's why we say continuation. Okay, next, another example, but in this case, it's a downward trend channel. So same thing, we are looking at playing the continuation. Bounce or reversal refers to price bouncing off of the trend, the sides of the channel, which you can see over here. And it happens multiple times in this chart. Okay, so if you were to put your entry over here, I made a buy entry to this trend channel here, and then you did that a couple of times, it would have been really, like, you would have made a lot of profit. Okay, now let's take a look at how we can play the breakout. So using the same checklist, is this the same checklist? Okay, not exactly, but looking at the same kind of indicators. Firstly, does price cross below the Ichimoku? So if price crosses below the Ichimoku, it suggests that the signal that Ichimoku is giving us is bearish. Do we have the Ichimoku momentum on our side? So is it bearish or bullish? Did price break any trend line? Basically, these three breakouts basically suggest that there is a change in trend. Okay, and then where is the next key level it could go to? Same thing over here, we are looking for confluence areas as well. Okay, playing the breakout. So first example here, I'm using a Fibonacci projection. So if you're not familiar with what a Fibonacci projection is, basically you're using the extension tool. If you're looking at TradingView, it's the Fibonacci extension tool, which has 3 points. So this is my starting, middle, and ending point. And in order to use this or to recognize that you can use it, we are looking for kind of a lightning bolt shape. So basically something like this, okay, and then it moves upwards. So, and for that, we use 3 levels, 61.8, 78.6, as well as a 100%. Okay. So I have a resistance level here. We have 2 swing highs, and then I have another, excuse me, swing high resistance here at 135.147. Okay, so from this level, price has broken out of this confluence area, this multiple swing high resistance. So it's broken out of it, so we're expecting it to continue to shoot upwards towards any one of these levels. Okay, and that's exactly what it did over here. So once price reaches our 61.8, we can expect it to continue, or once it breaks out of the 61.8, we can then expect it to continue to go towards our 78.6 level. Okay, and our 78.6 level is about the same level as the swing high resistance as well. So, yeah. Okay, now let's move on. So this is another example. In this case, we are looking at a descending trend channel. We're looking at descending trend channel firstly. Secondly, we are looking at this ascending trend line. But then we notice that price has recently broken out of this descending trend line, ascending trend line. So it's broken out of the ascending trend line, suggesting that it's gonna move downwards. Okay, so 2 points, descending trend channel breaking out of the trend line. Next, we have price moving below the Ichimoku cloud. So remember I mentioned earlier that if it moves below the Ichimoku cloud, then it's a bearish signal. So we have 3 indicators graphical and indicator, a momentum indicator that tell us that price is going to be bearish. Okay, so then we can expect it to continue towards this swing low support level here. Okay, and you can see that it definitely did hit where we expected it to go. Okay, another example here. Price recently broke out of the ascending trend channel, so that's point 1. Point 2, price is currently at this 127.2% level. So here we have a Fibonacci extension. So, okay, let me just go to our Forex Army website. If you missed our Fibonacci series, not to worry, but that's basically where we go through all of the different techniques in detail. Okay, we might not have that here. Okay, we have this. These are Fibonacci expansions. So they go from 0 to the negatives. And these also use that same lightning bolt shape as the projection. Okay, I think we don't talk about extensions here. That's so weird. Okay. Never mind, I'll just talk about it now. So for Fibonacci extension, we are looking at the above 100 range. So for the above 100 Fibonacci levels, we are looking at 127.2 and 161.8. Okay, and how you decide whether or not you want to use this level, you look for this shape, this like V shape. Okay, in this case, it's a little bit difficult to see because it's inverted. So it's inverted tick shape. But you can just imagine a Nike tick, just an upright tick. Yeah, so as long as the head of the tick is smaller than the tail and price retraces 100% of this initial shape, then you can go ahead and use this Fibonacci tool. Okay, so in this case, we see that price recently broke out of this ascending trend channel. It's also currently breaking out of this 127.2% level, Fibonacci level. So we're expecting price, once it breaks out, we're expecting price to continue to this 161.8. Okay, so 161.8 is also in line with this swing low support level at 0.66420. Okay, so we want to try and make sure that we line up Fibonacci with graphical levels as much as possible. And you can see here that that's exactly what happened. Okay, we see price break the level, the 127.2% level, and went all the way down to 161.8, just as we expected, caught our trade, and then shot back up. Okay, here's another example. So price recently broke out of this descending trend line. Okay. So using Fibonacci extension again, the same Nike tick shape, we can see price is currently breaking out of this 127.2% level. Okay, and we're expecting it to hit our take profit here at 85.724. that's in line with the 161.8% Fibonacci extension. Okay? And you can see that's exactly what happened here as well. So for our take profit, you can see that we have this 161.8 obviously, but it's also in line once again with a swing high resistance as well. And our buy entry, as you can see here, is also an overlap level because we have price reacting off of it from a swing low and a couple of swing highs as well. Okay, so that's all for my slides. Now I'm gonna go ahead and pull out some charts. So let me know in the chat if there are any specific charts that you'd like me to analyze. Okay, I'll just go ahead and look at gold first. Mm, okay, so let's start off with the higher time frames so that we get an idea of where prices are headed, just the general direction. Okay, we have 3 swing high resistances here, and we have price moving downwards. On our daily time frame, we have a swing, we have 3 swing highs that match our descending trend, line. Okay, so this is a valid trend line. Okay, and maybe I'll just place my swing first resistance there and my second resistance here, or rather my first support here. And okay, so a good habit is to try and see how far back you can put your support and resistance levels. So the reason for this is because you want to see, it's easier to see how many times price has reacted off the level, so you know how significant that level is. And you can see that this level is pretty significant with price reversing off of it a couple of times. Okay, next we have another swing, another second support here. Or maybe closer here. Okay, yeah. So the reason why I chose here instead of there is because here we have many swing highs and lows. Okay. So here we are playing the continuation. Now that I have my Fibonacci levels, I'm gonna go ahead and add some Fibonacci levels to support my support and resistance levels. Oh wait, this is the daily time frame. Okay, I'm gonna analyze it on either the 1 or 4 hour time frame instead. Okay, so here's the 4 hour time frame. let's see if we have a trend channel. Okay, no, we don't. Okay, but we can kind of, do we have a trend line? Okay, also no, because we have this area here. Okay. Okay, we don't have any support, any trend channels or trend lines, but we will just go ahead and add some support and resistance levels now. Okay, so this is my first support. Okay, I'm just gonna make this a dotted line because price is super close to this level. But I want to highlight it because of this swing high here. Okay, and then a resistance here. And here. Okay, now let's add some Fibonacci levels. Okay, I can see that my 50% lines up with my first resistance. 50, 70, no. This is a little bit too far, but if your 50% is, like if you look at my 50%, it's kind of about my first resistance. So that's fine. Okay, next, let's add some okay, I have my 100% lining up with my first support. Okay, but this is no longer valid because price has already broken out of the 100%. So even though it does line up with my first support, I can't use that anymore. Okay, so sometimes you do see some charts that are a little bit more difficult to find Fibonacci levels. Okay, I can see that my 100% lines up, and you can see this shape that I'm using for my projection. So I'm using a projection, as you can see my 61.8, 70.6, and 100, and also these 3 points. So I'm looking for this kind of shape here. Okay, so my 100% lines up. Okay, and again, the level, or rather the tool that I use is this one over here, the trend-based fib extension. Okay, I think that's all the levels that we have for now. Now let's go in with some indicators. So over here, we can see that maybe, okay. Yeah, so we can see that this 50% lines up nicely with my first resistance here. Okay, and we typically will trade according to the trend. So here we see that price is moving upwards. So we're likely to expect it to move upwards to our first resistance once price actually breaks out of this intermediate level. Okay, so let's pull out some levels to support this. Okay, and you can see price is moving above the Ichimoku cloud. MACD is also giving us a bullish signal. So I like to use MACD and Ichimoku because at one glance I can see exactly what the signals are. Okay. Okay, RSI isn't really telling us much. Now let me pull out my exponential and simple. So I like to use these two because not only can I check each indicator at the same time, but also I can see that when there is a crossover, that typically suggests that that the trend is reversing, or that the trend is changing. Okay, so here we can see that currently there is no crossover between the two, and in fact price is moving above our SMA, simple moving average. So it suggests that price is gonna continue moving upwards. Okay. Okay, let me know if there are any other charts you'd like me to go through or any other questions. Okay, if not, maybe I'll go ahead and analyze DXY as well. Okay, just before the inflation reports are released this coming week, I think tomorrow. Okay, so here's our weekly time frame. We see prices generally in an uptrend. Okay, but there is a slight reversal over here. Okay, let's look at our lower time frames. Okay, so earlier we talked about trend channels and the breakouts of trend channels. So this could be a possible breakout of a trend channel because we have two swing highs at the top as well as two swing lows. Okay, so this actually could be an example of a breakout as well. Okay, so we're still generally bullish on our weekly and our daily time frames. Now, if we take a look at our 4-hour time frame, you can see this uptrend over here as well. So also pretty bullish, except for this reversal here. Okay, but we typically will follow the trend. Okay, now let's get into our analysis. Okay. Even though our weekly and daily time frames give us a bullish signal, this is kind of bearish because price is breaking out of the trend line. Okay, so we'll just keep that in mind, the mix in signals, in graphical signals. Okay, and that's why we use indicators, momentum indicators, as well as Fibonacci levels and graphical as well. Okay, so this is my first resistance. Let's see if there are any levels that are closer. Okay, I'll just leave my first support here at this swing low and then change this to second support because this level is closer to my first resistance. Okay. Okay, now let's look at our Fibonacci levels again. Okay, now I'm going to use my extension. So I'm looking at the above 100 levels. And you can see that my above 100 levels line up nicely with my first support and second support. Okay, so this is the V shape that I'm talking about. Okay, in this case, it's a bit inverted. It would be like that. Okay. Okay, I have a 38.2 and 23.6 level. Okay, that both line up nicely. Okay, so we already have this confluence area here. Okay, which is why we are seeing so much resistance here at this level. Okay, I'm going to put my second resistance here as well. Okay, but we can see that price is breaking out of our first resistance. So once it breaks out of this confluence area, we'll definitely see it approach our first support and the 127. And then subsequently, once it breaks out of that, we'll see it move towards the 161.8 because the 161.8 is, or our second support, is also an area of confluence. Okay, we have the 38.2 and this 161.8, along with this second support, which, as I mentioned earlier, is an overlap level. Because you swing high here, swing high here, swing low there. Okay, so this is a confluence area, which means price is likely to be attracted to that area. Okay, now let's take a look at some indicators. Okay, Ichimoku is giving us bearish. MACD is also supporting our analysis. Let's look at RSI. Okay, RSI, let's see if we have a trend line. Okay, we do have a trend line on our RSI. Okay, so it supports our bearish signal as well. Okay, stochastic. Okay, stochastic isn't telling us much. Okay, we see that price crossover. Okay, which means just after price reversed. So you see this uptrend here. This is what I mean by looking for a crossover when you're looking at EMA and SMA, because a crossover would typically mean that price is likely to reverse its trend, which is what we saw here. Okay, so definitely moving downwards, especially with price moving below both of these indicators currently. So overall, all of our indicators that we've used support our analysis. Okay, let me know if you guys have any other questions or any requests. Okay, if there is nothing else. Yep, hi. Yeah, Demi Lola. Yeah, feel free to type your question in the chat.
Okay, can you hear me now? Can you hear me?
Yeah, hi.
Yeah, hi. The first resistance is a bit low,
Mhm.
like the swing low. The
Um,
swing low, first resistance,
yeah,
swing low.
is
How
what?
did you
Sorry.
come to that
How did I come
swing
to the
low?
first resistance?
Yes, on the swing low. I mean, resistance supposed to be at the top, not bottom.
It is kind of at the top if I just zoom in a bit. Price has recently broken under it. Can you see? And also because over here, right, at this, let me circle it here. Okay. Even though this is a support, right? So you would expect it to be a support, but price has broken under it. Okay, so once it breaks under, it becomes a pullback resistance because we're expecting price to pull back to it.
Okay.
Okay.
Okay. Because okay, the reason why you called it first resistance because it's the nearest it is the nearest I mean that's the last bottom, right?
Yes. It actually, okay, so a resistance, you're right, should be like this. So like at the peak, right? So you're right.
Exactly.
But in this case, because price has passed under it, so I'm actually using this as my level of reference. Because price has
Okay, in
passed
this
under.
case, okay, you mean once the price pass under it under the let me say the previous low, it's become a resistance level.
Yeah, so this is what we call a pullback resistance. Yeah. Okay, maybe I'll pull out last week's slides to show you what I mean, because we still have a bit of time. So we covered this last week. Okay, here. Okay, so a pullback is like this. So resistance, similar to what we saw earlier, here is my support, right? Once price breaks under it, it becomes a resistance, a pullback resistance.
Okay, pullback resistance. Okay, once price break the previous low, it becomes pullback resistance.
Yeah, and then once price reverses back to that, it then becomes an overlap. So like over here, in this example here, it's a pullback. And then if you look at the GIF, once it returns to that level, it becomes an overlap. So yeah.
Overlap. Okay, once it's gone too far, it become overlap.
Yes. Okay.
Okay.
Does that answer your question?
Yes, I grabbed. At least I'll further my analysis again. But I understand what you mean by what is it called?
Okay.
There was the first resistance. The first resistance, the line you drew, which is the pullback resistance. I understand it
Yeah.
now.
But yeah, it is a little bit close to where price is at. So I understand your concern as well.
All right. Okay.
Okay. Okay. If
So
there are no other questions, yeah, then that's all for today.
okay, the second resistance, sorry, the second resistance is is clear. It's clear to me. I mean, the first resistance should be at the peak.
Oh yeah, you can place it here as well. It's just that I prefer my resistance and support levels not so far away from where price is currently at. But yeah, it can be at the peak as well.
Okay. But why did you bring the resistance to the edge of the is it the edge? Is that the edge or neck?
Because of the swing high here.
Yes.
Yeah,
So
and because
okay,
I
so
prefer it a little bit closer to my current price. So current price is here, so I prefer it slightly lower, closer to where my current price is. But because our analysis anyway is we're expecting it to go down, so you can place it here as well. Because technically our second resistance would be our stop loss in this case, right?
okay.
So you could place it here as well. It's entirely up to you.
Okay, we are actually going for, in this case, you're actually going for a sell, not buy. So which means the second resistance should be the maximum stop loss.
Yes.
The first resistance, sorry.
Will be our entry, our sell entry. Oh, yeah, our sell entry. Then our first support would be our take profit. And then once price breaks that, then we can go in for another sell towards our second support. Yeah.
So how did you come about selling this chart?
Sorry?
How did you figure out sell in this chart?
How do I what? Sorry?
How do you figure out the chart? The market is going downward. How did you figure it out? I mean, it's going on the
Because
bearish.
yeah, because this ascending trend line, right? So we have an ascending trend line here, and price recently broke out of it. So it gives us a bearish signal. And then we also pulled out our indicators. So you see our MACD is giving us bearish signals. Ichimoku price is moving below the cloud. RSI is it's moving in this descending trend line. Yeah, if I use the EMA and SMA, it's also moving below the indicators. So all of our indicators and our graphical analysis all give us a bearish signal.
Okay. I mean, I can see the RSI. I can see the RSI, which is quite short for me. It is giving us a bearish, it is giving us a bearish tone, and the MAC, which is the MACD, correct?
Yes.
The MACD is also giving us a bearish trend as well.
Yeah.
But for the MACD, I'm not familiar with it. The one I'm
Yeah.
familiar with is just the MA, which is the moving average.
Yeah.
I'm just familiar with
Yeah,
the
that's
moving average. But
just the Ichimoku and the MACD are pretty easy to use. So yeah, you can just read up on those and use them in your trading as well. Pretty easy to use.
yeah, I will learn that as well. It's not part of I never use it for my analysis all the while because I use MA. That's what I'm being taught with. I use the moving average, but I think I will add RSI. Thank God for your analysis. I will add RSI to it. Let's continue. I will add RSI just to know my trend and to help.
Yeah.
The
Okay.
RSI is more I think it's friendly to be used.
Mm-hmm.
It's user friendly.
Yeah.
So and now I believe the RSI what is it called? The break on the chart. Sorry, I just hope I'm not just popping more question on you.
Sure.
Okay. I just want us to be on the same page. The RSI has confirmed the bearish trend. What else again confirm the bearish trend?
Okay, there are a lot of ways to use the RSI. Here I'm just looking for a trend line here. You can also look at so if you enable the lines, so the upper and lower lines, I mean here, the upper and middle bands, right? If it's above the upper band, okay, let me make it bigger. So if it's above the upper band, it's oversold. So it suggests that price is gonna drop, as you can see here. If it's below the lower band, it means it's sorry. If it's above the upper band, that means it's overbought. So we can expect it to drop. If it's below the lower band, it's oversold. So we can expect it to go up. Okay, that's another way. Yeah, another way is by looking at divergences, but we have another webinar for that, so you can stay tuned for that as well. So we'll go more in depth because I don't really have the time to go in depth right now. But yeah, those are the 3 ways that you can use RSI.
Okay.
Yeah. Okay.
What
That's
about
all the time that I have for you guys today. Thank you guys so much for joining me. Yeah, I hope you guys learned something and found this helpful, and I will see you guys again next Wednesday. Thanks, everyone. Bye.
all right, thank you. Bye.
Bye. Thanks, everyone.